Okay, now we have the major currency pairs. So if you're seeing any currency pair that is being paired against the dollar, it is basically a currency pair. Thank you so much, Imran, for that. But if you see another currency pair that you're going to see something there like GBP, JPY, any currency pair that is paired against another currency pair, but it's, like something like CAD, CHF, all these ones are currency pairs, because like here we would have something like here at Exotic would have something like GBP and the MXN, that like the Mexican dollar. These are just basically upcoming currency pairs that they will not really make you good money, and most profitable traders now really recommend you going with this, not just these three, but we have like very many of them that are being paired against the dollar. So when it comes to that, we also have what we call the base and quote currencies. Okay, so when you're seeing something like GBP USD, that is a currency pair, but what does it really mean? Because sometimes we trade these things and we don't even know what they mean. So what it means is that the first part of the currency pair is what we call the base. Okay, the base. That's the base. And the second one is what we call quote. The value of the base is always 1. Okay? And the value of this can change. So what does it mean? You could see something as GBP USD, then it's written what's the rate now? Okay, let's just say something like that, for example. And then later on you will see GBP USD, you will see something like 1.344. So it just means at this point, 1 Great Britain pound is equals to 1.3 US dollars. But something else might happen in the market, which probably favors the GBP against the dollar. So it says that 1 GBP is equals to 1.344 USD. So the price has actually changed. So let's go back to something that many of you probably could relate to. Okay, let's look at USD KSH. Of course, this is not a currency pair that you're probably going to find at the MT5, but I'm just using it as an example so that you guys can, be able to understand. So when you go to the Forex B-roll, you see something like USD KSH, and then you see something like 129, then you see something like 132, and so on and so forth. So what does it mean? It means $1 US, which is the base, is equals to 129 shillings. Then after some time, you might see $1 US is equals to 132 shillings. So this is the base, this is the quote currency. I hope we're together up to that point, and I hope you guys have understood something. Are we together? I'm trying my best, guys, to go a little bit, not as fast, but in a pace that, makes people understand what we're talking about. So are we together up to that point? Thank you so much, guys. So Byram, thank you so much. So let's continue. Thank you so much, Home PC. Thank you so much, George. Thank you so much, everyone. Thank you so much, Simon, and everyone who's following up. So we're going to get to something else that we call a pip. You normally hear people say that gold today moved 200 pips, 100 pips, but what exactly is a pip? We have what we call pips, and is that endpoints? Okay, so the pip is basically the smallest price movement, the smallest price movement, the smallest price movement that any currency can make. So for example, before I get to the example, I'll say that apart from the JPY, one pip is equals to 0.1231. Okay. So if a currency pairs makes a movement of 0.001, that is like it has moved by 1 pip. All right. So if a currency pair is at 1.1 thousand, for example, and moves all the way to 1.1005, what the difference is actually, okay, the difference is 0.1235. That's the difference. So we say that it has moved 5 pips. Are we together up to that point? This is where now it starts slightly getting confusing. So people might start, thinking that, oh, it is hard, kuna hesabu, kumbe kuna mathematics. But ideally, what I'm saying is that all these price movements are very necessary, because whenever they are happening, you either make money from them or lose money from them. So you really need to be very keen when it comes to this. So those are the pips, and then we have the points. We have what we call the points. Points are now even smaller. Okay, points are smaller than the pips. So one pip is equals to 10 points. 10 points. Okay, so one pip is 10 points. So you could hear someone say that this currency pair has moved for 50 points, this one, and someone else would say it has moved for 5 pips. That is just basically it. So one pip would be made by 10 points. So if we are looking at, for example, 1 point is equals to 1 over 10 of a pip but that is not something you should actually cram as such, but because once you start just trading with this thing, you're just going to be seeing the graph, and you can just tell gold has moved 200 pips. We also have things like the trading view. We also have things like the ruler right here that tells you how many pips probably you're looking at, so these are some of the things that you really do not need to worry so much and think like, how will I be able to calculate these things? You really don't have to think about it so much. SK, yes, that's true. 1 over 10, that is the same as 0.01. So 0.01. So 0.01 pip. Okay. So now, why this matters is because, you really need to understand the slightest small movements so that you can be able to know how the direction of the market. Now let's get into something else that is also important. You hear that brokers, they tell you that they offer leverage. So leverage is what allows you to control a large position with a small amount of capital. So for example, a broker will tell you they have a leverage of 1:1,000. So they're telling you for every $1 that you're getting into in the market, you are controlling the market as if you have $1,000. So if you're getting into the market in a trade with like $100, it means that you're controlling the market as if you have $100,000. That is why if you get a good leverage and the trade moves in your position, you are able to actually make a lot of money. That's where we see some people flipping, crazy amounts of money. So every time you are trading and you're using leverage, you're getting into a very big, you're trading like someone who has a lot of money. But now it is very risky because high leverage increases both profits and also gives you higher chances of making bigger losses. So when you're looking at that, we really need to be a lot careful. That is why we will be talking later on about things like risk management, use of stop loss, use of take profit, all those things we're going to get through with them. So another important thing that you're supposed to know when it comes to Forex is what we call the margin. So the margin is basically, let me just say, the amount of money that your broker will lock when you open a trade. It is now like the deposit, your deposit that now is able to keep the position running. That is why when you are almost blowing an account, you get what we call a margin call, or you see the MetaTrader 5 just become red because now you no longer have enough margin to hold a position or a trade. Then I also talked about the spread when I was talking about the bid and ask. Talked about the spread. That is basically the difference between the buy, that is the ask, and the sell, that is the bid price. And that is also how brokers make money, and also some liquidity providers. So if you have tighter spreads, you're good. So spreads have to be tight. Okay. And then now let's talk about what most people probably are looking forward to. We have what we call the long position and short position. Long positions are buys. It's not complicated, guys. Do not overthink. Mulala is saying is very famous for margin calls. That's probably because you don't use a good stop loss or good risk management. So when you open a buy position, you say, today I am going long. For this trade, I am going long. Now you've just opened a buy position. When you open a sell position, you say, I am going short. You understand? So going long or a long position is a buy, a short position is a sell. A stop loss, we have what we call a stop loss or the SL or the stop loss. So a stop loss is basically what we call a safety level that you would put automatically to close your trade if it moves against you. So for example, right now the trade, let's say, is here at 33.30 and you're targeting the trade to move up until 38.50. So if it's here, if it moves your direction, you make money. But if it moves opposite your direction, you lose money. So you would basically place it somewhere, let's say at 38.20, you place your stop loss. So if the market moves against you, it doesn't eat all the money in your account, because you can imagine if it keeps on moving, it is just, eating the money in your account. So you place it somewhere here so that if it moves, you just lose some small amount of money, but you don't lose all the money. The take profit, that is everyone's favorite. The take profit is a level that you set automatically to close your trade when your profits are reached. For example, let me give you an example. The market could be here, then it's going up, then you set your take profit here, because probably you think that it might reach here and reverse, because you see, if it reaches here and reverses, now you'll start losing money. So if it reaches here, it comes from here, goes up to 38.60, hits your take profit, it automatically closes that trade, so you make money. Later on, I'll show you guys, don't worry, in these classes, how to do all these things, to put a take profit, to put a stop loss. They're not very easy. Right now, we have tools that help you do that just within the system. We have the manual way of doing it. All those things are not as hard as they sound. So the next thing that many people know is the chart. I'm just going to show you what the chart basically is. This is basically the chart. Where is it? Just trying to look for it. That is basically the chart. That is basically the chart. These are what we call candlesticks. These are what we call candlesticks. Later on in your trading journey, you're going to know what a candlestick, when you look at a candlestick, what is the information that it's giving you? So each candlestick basically shows open, the high, the low, the close in different time frames. So, for example, for a buy candle, for example, this is a very good one. For this one, it shows you the market came from here to here. Okay, that's a buy candle. Okay. For a sell one, it shows you the market came from here to here. So if you're looking at these two candles, for example, it says the market started here, went a little bit down, and went and closed there. So there is where we are seeing the body and what we call the shadow or the wick. The wick is where the market reached. The body is where the market closed. So in that time frame, for example, at this time, we're looking at 15 minutes time frame. The market started from here. Okay. If you're seeing this, it shows that the market came up kidogo. Let me just zoom it in a little bit so that you guys can see. So the market came from here, went up, and closed at this point. So the next candle opens at the same point, probably goes down, then goes up, taps another area, but closes at here. Then it opens at here, because now we are going, the red one is showing a sell. So probably tried to go up, then went down and closed at here. So the buy candles open lower and close high. The sell candles open higher and close low. This one started here, went up, closed there. This one started there, tried to go up, closed here. Then the next one opened there, went down, closed there, like that, like that. So that is basically, those are basically what we call the candlestick patterns. They are showing us how the market actually moved. The market moved up, for example, aggressively. We can say here that the buyers were in control because the market moved like this, moved again, moved higher again. Here we had sellers in control, and then it is basically just that. Then we also have areas where the market, was doing what we call consolidating, didn't go high as much, didn't sell as much. It was basically at the same level. That is what we call areas of consolidation. Later on, you guys are going to be learning about the support, the resistance. These are very important things, but don't think about it. I just want you guys to go very slowly, just understand what's important so that You just don't get into trading, and when someone tells you trading is a scam, or why are you trading, or how is trading not a scam, how is trading not a gambling, you can be able to tell them, this is why I trade, this is what Forex trading actually is. Because most traders actually out here cannot tell you how Forex trading is not a scam. But you need to be able to do it, not even for other people, but just for yourself to actually know that you're getting into the right thing. Now, we also have other things like the trends. Let me just take this. Let me just go right back here. Just double tap this, brings that here. We have the what we call the trend. From if you look at this market from here, it was going up and down, yes. But if you take this ray line, let's take a ray line here. Okay. Put it there, put it there. Wherever the market reached, right? It is actually a diagonal line, but it shows us that the trend is generally an uptrend, right? So when we're talking about trends, we have uptrends and downtrends. That's a trend. We have the uptrend. This is an uptrend. Generally, the market is in an uptrend. Also, you can take the ray tool again and come somewhere like here. Then you say at this point, the market was also in an uptrend. Then we have what we call a downtrend. For example, from here, now you start with the higher part of the candle to wherever the candle touched. This was a downtrend. This was an uptrend. This was an uptrend. But now let's just look at generally the market whilst, just speaking of how the market is moving. The market here is in an uptrend. Come right here and say that the market is in a downtrend. As you guys can see, the market is in a downtrend. So I want you to notice when I'm drawing this, I'm using this ray line. Later on, you'll learn how to do whatever I'm doing, so don't worry about it. So this is a downtrend. This is an uptrend. Okay. Uptrend markets have what we call Didi. I don't know if I'm going in deeper or too fast. Should I talk about the lower lows, lower highs, or it's too early? That's. Okay. Okay. Didi is saying that I touch on everything. Okay. So when we're looking at this market, you're going to realize one thing. Let me just you're going to realize one thing. Let me just try to get something here. I can't see it, but let me just do this. So every time the market is moving, okay, every time that the market is moving, it creates what we call lower lows and lower highs. Every time that the market is moving, it creates a lower low and a lower high. Let me just write it here so that you can know. Lower lows and higher highs. Higher highs. Then lower highs. And higher lows, lower highs or higher lows. lower highs and higher lows. Higher lows, yes, higher lows. So let's talk about it in a nutshell. Let's look at this market, for instance. Okay. Let me remove this so that you guys can understand. Let's draw a trend line here. Just say look at wherever the market touched. Just a moment, guys. I think I'll be able to get it in a few. Let me just change the time into 1 hour. Nice. I think we have a perfect example here. So you can see the market is moving up, down, up, up. This was a very good opportunity to buy. And now look at this one, for example. Thank you. Got it. Thank you. Just like that. So the market was moving from here. So this is what we call, this is a lower low. Okay. Okay. Then it tapped here and created a higher high. Then came here, created a new lower low. Then came here, created a new higher high. Another higher high, lower high, like that, like that. It keeps on creating that when it's on an uptrend. Now, when you're coming to now the downtrend, that is now where we get the lower highs and lower lows. So for here, for the uptrend, I think maybe I've made a mistake on that. For the uptrend, we have the higher highs and higher lows. Okay. This is the higher high, this is a higher high, new higher high, new higher high, new higher high. And then we have the low, but for the lower high, lower high, lower high, lower high, lower high, lower high. Okay. So for the uptrend, we have the higher highs and higher lows. For the downtrend, okay, for the downtrend is now the other opposite. We have lower high, lower lows, lower high, lower lows, because the market is going lower. But when it's going in an uptrend, the market is going higher. Okay, these are things that you're going to understand as time goes. Now let's go again and talk about another thing that many people talk about, that is volatility. Volatility is how fast or how much the price basically moves. If a currency pair has a high volatility, for example, the gold, the Nasdaq, we say that they are highly volatile. If they don't move as much or they have slower movements, that is what we call the lower volatility. Then we also have something else called the liquidity. Liquidity, this is how easily an asset can actually be bought or sold. So Forex is basically the most liquid market in the world. So liquidity is basically how easily an asset can actually be bought or sold. Then we have other things. Of course, once I think I settle down, I'm going to, after the class, but not today. I don't know if I'll be able to access my laptop today from the office. Tomorrow, I'm going to send you like a whole PDF of all these introduction terms that probably they could help you, in actually understanding all these things. And then we have what we call the lot size. And it is one of the most important concepts actually every beginner must understand before picking or placing a trade. And a lot is basically the size, or let me put it in simpler words, like the volume of your trade. Lot size. Is that correct? Lot size, yeah, like that. So if you're buying or selling with a bigger lot size, it shows you are getting into the market with a very big position. So for example, if you open a trade, you're not just buying like one USD, 1 euro, 1 GBP, you buy it in lots. Sawa? So we have what we call the standard lot. You don't have to cram all this. You don't really have to cram all this. Sawa? So a standard lot is basically one lot. One lot. If you're getting into the market with one lot, Okay, it means that you're buying 100,000 units of base currency. Sawa sawa. Then we have the mini lot. The mini is basically 0.1. You don't have to cram this. I'm going to repeat this. We have the micro. Hakuna mtu atawai kuuliza umeingia na mini lot or micro. No. It is just something, information that I think is important. Then we have the micro, and now we have standard, mini, and micro. We also have the nano, but I don't really think we have brokers that allow us to use the nano, which is like 0.00001. So I think these are the lot sizes that are allowed to use, if I'm not wrong. So it depends with your account size and also your risk management style. If your account size is huge, you have $100,000, you have $50,000, buying, if you're entering into a buy position with a one lot, you are safe because your account can actually be able to, allow those price movements. Because you see, for every one lot, if you're placing a buy for one lot, it means that if the currency pair moves 1 pip against you, 1 pip on your side, you'll be able to have gotten into the market like you've bought 100,000 units. But also, if it's moving against you, it means that you're going to lose as if you had bought 100,000 units. That's why you see, if any of you here have ever blown accounts, probably you got into the market with 1 lot size, 5 lot sizes, and you see like within less than 3 seconds, you blow your account because you got into the market heavy, but your account was very small. That's why I normally tell my students and our students in general, like if you're starting, just use a small lot size. Use a 0.01. Use 0.01. Grow your account slowly. Every time you double your account, double your lot size. Every time you double your account, double your lot size. I started at 0.01, went to 0.05, went to 1, and I even have friends who are at 50. I've not yet gotten there where I can place one trade with 50 lots. People need like excessively big accounts to actually do that. So you just start small with 0.01, understand how every price movement, affects your account. And we're going to talk also about why this matters. Because you see, it really determines your profit. I'm seeing many people are chatting there. I don't know what they're saying. I've seen people in this firm buying gold with a loss of 13. How large is the account? Hello, answer my question, bro. What are you saying? Abdul, I think I already answered that question. So I think I already answered that question. So when we're talking about one lot, it means that for Euro USD, for example, when Euro USD moves for 1 pip, okay? When Euro USD moves 1 pip your direction, let's say you're using a standard lot of 1, you are literally making $10. So if it moves 200 pips, you make $2,000. And I want you also to think about the opposite. You have only a small account of $100 and you've put a lot size of 1. So if Euro USD moves 5 pips, okay, on the negative side, it means that you've already lost $50. You understand, guys? And I don't want you guys to take it as a gamble, like, hey, let me just today put 1 lot, I could be lucky. No, you'll be taking trading as a gamble, and I want you guys to take it professionally. That's why later on we would talk about things like risk management, managing your risk in such a way that you're not stressed that, if I lose this $5, I'm still okay. So if Euro USD moves one lot, it means that you're making or losing $10 per pip. Okay, but if you're using 0.1, okay, it means that you're making or losing $1 per pip. I hope you guys are getting what I'm saying, okay? And then if you're using 0.01, it means that you are making or losing 0.1, okay, dollars per pip. So according to your account size, according to you, how much money you have, now this is where now risk management comes. Because if I have a $10,000 account, let's look, for example, at a $10,000 account, 10,000. So if gold moves 200 pips my side, okay, it means I'll make 200 times 10, I will make $2,000, which is really good. But also think about it. If gold moves 200 pips on the opposite direction, you could still lose the same. So you ask yourself, am I ready to lose this much? So you could be having this big account and you just decide, let me just use a lot size of 0.1 so that if gold moves my side, if gold moves my side, I can be able to make $200 from the 200 pip movements. And if it doesn't move my side, I only lose $200 and my account is at 10,800 instead of 8,000. You understand? So if you have a smaller account of, let's say, $100, for example, if gold moves your direction, you could flip $100, okay, to $2,000. But if it moves negatively with a lot size of 1, it means you literally blow your account. So that is why the lot size you're using is very, very, very key. I hope we're together up to that point. So most traders are normally told, use a good lot size and risk. And most traders, and I will tell you for a fact, if you're ready to do this thing for the next 10 years, for the next 20 years, you're in the right space because it needs a lot of patience. But if you want to do it for 1 year, 2 years, and make millions out of it, it is possible, but you would probably, be gambling if, most importantly, if you do not get this skill. So for the lot size and risk, always choose a lot size based on your account size and the risk percentage. We have people who would say, for every trade, I'm risking 5% of my account, 10% of my account. But a good trader would literally risk 1 to at most 3% of your account. So let's look at 3% of 10,000 so that you guys can understand how this thing actually works. 3% of 10,000 is around $300, if I'm not wrong. So you've risked $300 and gold moves 200 pips your side. Okay. So you're making $10 for every pip. We have pip movement of around 2,000, let's say even 10 pips movement. So if you're using an account of 300, you could literally make 300 times the 10 pips movement times another 10. You could make a lot of money. But now, do not look at that part exclusively without also thinking about, are you ready to really lose the 300? So just risk the amount that you are ready to lose. If you're ready to lose $500, well and good. You are ready to lose $100 out of $1,000 account. Go for it. But you see, the lower your risk, the lower the risk, the more chances you would have in the market. So if your account size is like $10,000, for you to be able to blow this account with 1% risk, it means you have 99 other trades that you can actually take before you blow your account. But if you go crazy to like 20%, it shows you that you only have 5 chances before you blow your account. So the lot size and the risk management go hand in hand. And also you incorporate the take profit, you incorporate the stop loss and things like those. So ideally, we've done a very good introduction to Forex trading. Didi, what have I forgotten? I'm good? Yeah. Yes, I think we've done a very good introduction to Forex trading. We just wanted you guys to just know what it is, what it entails, and we're of course going to have many sessions of this kind where we will be engaging you guys for like an hour so that you guys can be able to know what exactly this thing is and how exactly it works. So I really hope you guys have understood something. At least you guys have something to take home. At least you guys now do know what Forex trading is, how it works, and at least all those things that come with it so that when someone tells you you are a scammer, you could boldly tell them or just know that they're speaking from a point of ignorance, because at least now you guys understand. So when you hear people saying forex trading is a scam, forex trading is a gamble, now at least you can tell them, did you guys know that forex trading is the biggest, financial biggest industry in the world? Yes. And before maybe I wind up and also tell you guys when the next session is, I want to let you guys know that you can actually open your account with Zealous Markets. That's the broker that we do recommend. They are the best. They have fast execution speed. They have an account of raw +3 where you get zero spreads plus $3. Didi is gonna send the link in the group, and that is the broker that we do recommend. And the only thing that we ask for all these free trainings that we offer is that also you guys support us in terms of we work with our with brokers, and as you guys also know that you are not able to get into the market without a broker. And since we work with them and we want, if I work with a client, of course I would want them to know that I'm doing something. So if you guys support us and just sign up with this broker, you will really have a good experience trading, and of course you will also be able to trade safely with them. So when is the next training? When it comes to all these trainings, we have of course, even in this group, we have people from the diaspora, that is the US, UK. We have another group of another free VVIP group, that is mine, another DD's VVIP group that is also free. And we also have, of course, other people who say, these classes, they're taking us too slow. We want something very fast. I have a lot of time with me. I want to learn fast and start trading as soon as possible. And if you want that, you can actually reach out to me or reach out to Didi. Do not actually hesitate. And we are going to be doing at least these sessions at least 1 or 2 times a week, right, Didi? Yeah. Yes. And then someone asked if if you managed to sort out the M-Pesa deposit in the Zelance platform. We're looking forward to actually the M-Pesa being launched either tomorrow or the day after tomorrow, because the whole of this past week, Didi and I have been testing it to actually make sure that we give you a good experience when it comes to Zelance. And I want you guys to understand that Zelance has been in operation in Asia. Zelance has been in operation in Mauritius, in India, so in the Middle East and in Asia. And the reason why they probably didn't have the M-Pesa is because they were not in the African market, and it is us that are actually introducing Zelans in the African market. I also need Didi to help to sort out my deposit issue. Please, George is asking for that. And for the rest of the questions, I will let Didi speak for like 10 minutes, talk to you guys, interact with you guys, because, you know, he is here with me and I am tired, guys. So, guys, Didi, you're going to answer any of their questions, and I really appreciate each and every one of you guys for taking this time. It just shows you how dedicated you are. You could be sleeping, you could be working, you could be doing something else, but you just chose to listen to me. I do not take that for granted. Thank you so much, and I love you all, guys, so much. I'll see you in the next one. Didi will let you guys know in the group when the next one will be, but probably we're going to have it same time. I think around this time we're going to be having the classes because we know many people are always working. So we're going to try our best to make sure that we have it, once, at least twice a week, so that we can be able to, help each other grow. Thank you so much, guys. From me to you, have a good night. Karibuni sana nyote, Esther, Nora, Lucy, and everyone. Thank you so much. Didi, take over.
Wow, it was a very nice session, man. I told you guys I don't do much theories. I'm also learning because I hate theories. Man, I just love analyzing the market and taking my trade, but it was a very nice insight for the beginners. So thank you for your sacrifice. I'm trying to open the mics for several guys from the USM South Africa futures. Zealand's ambassador. Moabi, yes. Moabi, we are coming to South Africa next month. Actually, in the next 3 months, 3 weeks, we'll be coming to South Africa. So I hope to see you there. Ali hajawaambia, Ali hajawaambia is the head of Africa in Zealand's market. Yeah, so I need to hear some questions. I've tried to unmute some mics for you guys to hear what you have to say. Hi, Brenda, how are you? We have two Brendas in the group before we close this session for tonight. So remember, guys, we have private sessions which are ongoing. For the guys who are really busy, thank you for the guys who are in Dubai who managed to attend our seminar. We have private sessions which are ongoing for if you have a very tight schedule. We have flexible timings for you guys where we have private sessions, or you wish to go step by step to be taken slow like a small baby. We have private sessions. Make sure you reach out to Ali or to me so that you can enjoy the same. Now, any question before we close? I will then we prepare for the next class. So let me hear from you guys. How has been the class? Hello? Are we together? I'm trying to increase the
Hello,
volume.
we are together.
Yes,
And
George, how are you? Hello? Okay.
hello, are you getting me?
Yes, I can hear you.
Yeah, the class has been awesome. We want to say that was a very wonderful introductory session, and we look forward to even getting more and more insights about this thing. You know, this is going to help a lot of people. I think that mentorship was top notch. So thank you so much, Presenter Ali and DDFX, for actually uh, bringing this program. This will help a lot of people. Thank you so much. This is Byram Bikoko from Mombasa.
Nice. Hi, Brian. Hi, Tracy. How are you? This is Tracy from Denmark. How are you?
Can you hear me?
Yes, I can hear you.
Yes, I'm good. I'm here. I'm following.
How has been the session so far?
It was great. It was great. A lot of things to learn for beginners, definitely. Thank you to Presenter Harley for taking us through.
Okay. So thank you guys. It seems you guys don't have more questions. Remember, we'll be doing our live trading session tomorrow. We'll be doing live market analysis, courtesy of Zealand's market. So prepare for wonderful things. We are preparing one mega event, Forex trading event before end of the year. So we hope to see you soon when we are back in Kenya. So thank you so much, guys. I hope you enjoyed the class. Hi, Victoria. Okay, so let's have you have a good night. You have a good day. For the guys who are in Dubai, thank you so much for having us. Thank you for the guys who have taken time to take us around, and thank you for the guys who have been treating us. We've really enjoyed a lot in this area. We don't feel lonely. We feel at home. So thank you so much, and we're hoping to create a bigger community for you guys in Dubai. For the guys who are in Qatar, we are still coming for you next year. Yeah, we have goodies for everyone. Even those who are in Denmark, we are coming for you. So thank you so much. You have a good night. Always remember to keep it here. See you tomorrow during the live trading session on TikTok. Enjoy your day, enjoy your night, and see you in the next one.
Good night.